Today, Fora Financial announced a partnership with Celtic Bank. So I want to talk about that in this video. And it's in direct response to the new Texas state law that affects sales-based financing transactions, alternative business financing, MCA, revenue-based financing in the state of Texas. So there's a lot to get to because funders are moving rapidly to get into compliance or offer new loan products. Some are sitting on the sidelines. Others are brokering deals. So I'm going to talk to you, folks, that if you're a broker, you need to be wary, and why to be wary of those folks that are saying they're still funding in Texas. Okay. So first things first, I posted in our group. It was shared on LinkedIn that they put out a press release that they announced they are partnering. They entered a formal agreement, a partnership agreement with Celtic Bank. And I'll just kind of go through their press release here. So Fora is a leader of flexible financing solutions to small, medium-sized businesses. They've entered an expansive partnership with Celtic Bank, a Utah chartered industrial bank, further strengthening its commercial financing capabilities. It says, in light of recent industry and regulatory changes, such as those recently enacted in Texas, the ability to offer alternative financing has become restricted. This should be very well known to most of you by now, especially if you're keeping up with funder intel. Through this partnership, Fora and Celtic are able to provide businesses with sustainable capital. This positions Fora ahead of many competitors still navigating regulatory uncertainty. It goes on to have a couple of quotes. It's a transformative moment for them. The CEO, Gerald Feldman, says, expanding their lending capabilities or removing barriers that previously limited our ability to provide the most suitable financing solutions for businesses nationwide. So first things first, and this was talked about. I talked to a funder like a month ago about possibilities because he was kind of like the wait and see, to what others would do, and then kind of go through the legal framework to put something in place. Others have moved quickly. Other funders that were doing MCAs, sales-based financing, revenue-based financing, moved to offer term loans, a totally new product. And then, there are some that are saying that they are still funding in Texas. So let's go through those one by one. So first, this was always a possibility. It was a matter of who can get it done and with whom, partnering with what bank or what credit union, because credit unions and banks are exempt from the new Texas law HB 700, and a couple other exemptions, right? So one would think, hey, if you can partner with a bank, then you're exempt and you can still offer these sales-based financing transactions without any other issues. Okay. So, and if you aren't necessarily aware, there's two key issues with the new law is that you cannot automatically debit a business owner's account. Okay. And then two, you have to have a first security interest, and it's not as easy as just having UCC lien. And let me pull up the page before I get too deep into it, and certainly let the lawyers decide for you what you need to do. But here it is. So, a validly perfected security interest. It's a generic UCC1 filing likely won't suffice. And again, all this is kind of in flux. It's going to be tested. Funders are going to be tested in many different ways if they continue to fund or if they fund under some sort of legal agreement that they feel like they have standing, for, not standing in the legal sense. But so there may be some other agreement that needs to be in place, a control agreement, which is called a DACA. And there's a lot of other things that need to be in place. So these funders, like Fora, who does sales-based financing transactions, and there's others now that have, and I'll talk more about this in a second, that Everest Business Funding, CFG Merchant Solutions, Spartan Capital, and others have announced a totally new product, a term loan product. So one, it is very difficult to become a partner with Celtic Bank. They are a leading SBA lender, 7A, USDA, 504 loans. They're in the top, like 10 SBA lenders nationally. Okay, so Celtic Bank, a partnership with them is a major win for Fora. Okay, not every funder is going to be able to do that. And so that takes some expertise, a lot of background, a lot of history, and so on and so forth. There's going to be very few that are going to be able to get that type of partnership, but maybe there are other types of banks that will. So not necessarily at the Celtic level, but other banks, and that's all you need is a bank. It's a national charter, and so they can then be exempt in the under the Texas state law. Okay. The second part of what's happening right now, and I kind of talked about the possibilities of this, and you see more and more people coming out now. So is to create a new product. So instead of offering sales-based financing and instead of being able to overcome the hurdles and find ways to comply with the law, be in compliance with all the different things, these major funding companies, direct funding companies offering sales-based financing transactions, decided to offer a term loan. That should tell you a lot. That a lot of these guys are well connected. They have the capabilities, the resources, the legal backing, everything to find a workaround or be in compliance with the law, and instead they created a term loan. It likely is a win for business owners, and for them, we'll see if they can build that successful product and have it perform down the line. But and then even today, I was talking to a broker that says he saw a couple of other companies. I think Capitus created a term loan. Fox says they either funding or they created a term loan. So there's Biddy that I heard is for in fact offering a term loan, and there was one other. But either way, these companies are coming out. They probably have found similar attorneys to do the legal legwork for this term loan product. And then people eventually will see the contracts are being sent out, and eventually it'll be passed down to where it'll be simpler if you to get to offer a term loan product in the state of Texas and maybe other states, if you have those other things in place as far as your cost of capital, your processes and systems in order to make it work successfully, because anyone could put out a contract and close the deal and fund the deal, but it's a matter of what is successful and performs in the long run. So there's a couple of other things that are happening now. So the easier thing is what I kind of just alluded to is that people are waiting. They're just not going to fund in Texas now. They're waiting to see what actually happens, what others are doing, maybe get into it a little bit later with similar, legal representation, and also to see if there's any court challenges by anyone down, well, this early on. I'm not sure if it'll happen very quickly, but at some point down the line, there's going to be those legal challenges, right, from a business owner or for excuse me, from someone else. And then the fourth point, last point, or fourth thing that's going on is that people are saying they're still funding in Texas. They are putting it out there in different channels that, yeah, we're funding second positions and more, or we're just not funding first, or we're funding first and everything. And I'm like, so I would love to know more about it. I don't think they're going to be forthcoming. I would love to know why that some of the biggest funding companies in sales-based financing, revenue-based financing, MCA, are choosing to go to a term loan instead of being able to get into compliance with their MCA funding. And so the most logical answer or thought from that is that these folks that are saying that they're still funding in Texas or that they made some modifications or whatever and they are funding in Texas now or that they fund second position, that person actually doesn't know what they're talking about at all. Um, and it just leads me to believe they're brokering the deals, right? So they're going to tell people that they're getting that they're still funding in Texas, and they're brokering the deal to someone else that is able to fund, right? So a company like Merit Business Funding is a subsidiary of a bank. They are continuing to fund. That's legit. Almost everyone except them was not under a bank as far as a MCA funder, a sales-based financing funder, right? There's other companies that offer other products that are have partnerships with banks, and that's different. So be careful if you're a broker and you're sending a deal, someone tells you that they're still funding in Texas or that they are funding in Texas. Be careful. Ask questions. How did you get around it? What are you doing? How are you not automatically debiting the account? Like, what's the contract look like? Those things should come up like instantly. And everyone who I mean, there may be some, you might want to not, as a funder, if you did find some workaround to be in compliance with sales-based financing, sure, you may not want to share your secret sauce if there is such thing. But I mean, there should be something you can share, and certainly that the merchants would want to see. And by the time you send out your first contract or whatever, it's going to be seen by everyone eventually. And so there's not going to be too much, too many secrets after that. So that's all I have for this video. I think there is a lot of moving parts right now. People are testing things. This is one of the most surefire ways to continue funding in Texas. And Fora will likely have other products that they're going to offer in other states. Whether it be a term loan, lines of credit, whatever else it is. They are now hooked up with a bank, and there's all kinds of possibilities now. All right. So drop a comment or a like if you got something out of this video. Love to hear from you guys, and I'll see you in the next video.